Changes and allowances as we go into the new tax year. In this video, I want to look at the allowances that we get, the allowances that have changed, and the changes in the tax system as we go from the 5th to the 6th of April and we enter the new tax year. I do regular updates on tax and accounting issues, so if you'd like to be kept up to date, please subscribe to the channel, and if you press that like button, it helps me in the channel, so thank you for that. So first let's look at allowances. So somebody said we get new allowances just because we come into a new tax year. So for example, people put money into ISAs. You can put £20,000 a year each into your ISA, and you've got a new allowance as we go into the new tax year. So it hasn't changed, but we have got a new allowance. Similar with pensions. Well, last year it was £40,000 you could put into your pensions. This year it's £60,000 a year, so it's a change and a new allowance. So that's like a double thing. We've also got personal allowances. So for example, some people pay their dividends annually. So we've got a new personal allowance, new place where you start paying higher rate tax and where you start paying tax. The important thing with those allowances and many allowances is that they haven't changed. So there's actually a hidden substantial tax increase because retail price inflation is about 12%. You put 12% inflation over static allowances, that means they're being eroded and we're going to end up paying a whole load more tax. And that's important for personal allowances, so that's part of the tax drag where they're collecting large amounts of additional revenue. But I think the big one there is VAT, where the £85,000 limit before you have to register for VAT has been maintained for 6 or 7 years now. And it's been really heavily eroded by inflation, and it means that tradesmen are increasingly finding it difficult to keep within that threshold, particularly when raw materials that they're charging onto their customers have rocketed in price, so making that work for tradesmen. And there comes a time, tradesmen, when it will be untenable for you not to be VAT registered unless they start increasing that limit, and there is no indication that they will do that. So allowances are being stuck and we get some new allowances. That's the first thing I want to look at. So what else is there? There's the increase in corporation tax, which I have talked about quite a lot on these videos. So that takes effect from the 1st of April. If you've got a March year end, you simply go into the new system. Increase in tax for all but the smallest companies is from 19 to 25%, so that's a 30% increase in the tax you pay, which is why I've been going on about it. If your year end is not the 30th of March, which is actually most companies, then you'll have a blended tax rate, so you'll pay some tax at the lower rate and some at the higher rate. So if your year end is December, you will pay a quarter of the year at the old rate and then 9 months at the new higher rate. So that's how that works. R&D, research and development, has been important for techie businesses, people who write software and do new stuff. That's been really important for a lot of small businesses. That's becoming much less generous with effect from the 1st of April. So of course it doesn't affect us just yet because that's when it comes into effect. We've then got to run a year and then we'll do our tax returns and get less back in R&D. So for the year that's just gone and the R&D that we'll be doing over the next coming months, we'll still be on the same levels, but then it will get worse in the future. They've also tightened up the rules that you'll have to tell the revenue, not in advance, but less in arrears when you've done research and development. What they're trying to stop is people suddenly giving sold by the idea that they can do R&D and then going back and doing 2 years retrospectively all at the same time because they think that's an abuse of the system. Don't tell them in advance, but tell them less in arrears. So that's another important change to research and development. I think one of the bigger changes is to capital gains tax, and it's one that I particularly annoys me. With capital gains tax, they've more than halved the allowance of gains that you're allowed before you pay the tax. So previously it was £12,300, it's now £6,000, so just less than half, which is fair enough, except that the reason they brought this big allowance in the first place was when they got rid of indexation allowance. You only paid gain after you'd indexed for inflation. They got rid of that because, they said inflation's really, really low, you don't need to index anymore, but we'll give you a big allowance so that it's fair. What they've done now is they've hugely increased inflation so that most of your gains will be just purely because of inflation, and at the same time reduce the allowance. So I think it's a double form of taxation, and I think it's particularly annoying because they create the inflation. They create the inflation by creating money. They create money to bail out the banks and their friends in the city and in big business. They do that, and then we have to pay the capital gains tax, and we have to pay the capital gains tax on their inflation that they've created. And I don't like it, and I don't think it's fair. But there we go. All I can do is tell you what the taxes are. I can't actually influence policy very much, but there we go. It's a grossly unfair way of taxing people, but that's the rules. So just as a last, because I got a little bit carried away there, I got a little bit angry. So just as a whimsy at the end of the video, I just thought I'd just look at why the 5th of April is the tax year end. Well, you have to go back to Julius Caesar, and under Caesar they created the Julian calendar. The Julian calendar was a way of, rather than having 365 days, to put in leap years. So it's very approximately correct, and every 4th year obviously you have your leap year. But it's not quite correct. And in the 16th century, Pope Gregory came up with the Gregorian calendar, which was slightly more correct because you don't have a leap year at the end of centuries. But here in Britain, we didn't like the Pope at the time. We were very much a Protestant country, and we were having none of this Pope stuff. When you cross the channel between the 16th century and 1750, when we adopted the Gregorian calendar, so for well over 100 years, you'd not change your clock like we do now. You'd change your calendar, because the dates on the continent were significantly different to the dates in the UK. And the gap in 1750, when we finally converted to the Gregorian calendar, there was a difference between the year end. So the year end was always Lady Day, the 25th of March. So they changed the year end from the 25th of March to the end of December. But the 25th of March was the 5th of April. So it's the difference between the Gregorian calendar and the Julian calendar, assuming that you have a 25th of March year end, and as dated in 1750, and that is why we have the 5th of April as our tax year end, because it's sort of the year end. I think it's gloriously whimsical, and any other British influenced country has a sensible date. So you know, if you go to Ireland, or if you go to India, or if you go to Canada or Australia, then they've all got a sensible date. But no, we've stuck with this for many centuries, and that is the whimsical reason why we have the 5th of April as our tax year end date. So in this video we've gone through what the allowances that have changes, more importantly the allowances that have not changed, the increase in corporation tax, and I do have other videos where they give more detail on that. There are changes to R&D tax credits. I will be giving more detail on that in future videos, so subscribe to the channel and you're kept up to date on that. And the important reduction in allowances for capital gains tax. I hope you've enjoyed this video. Please press the like button if you've enjoyed it. That helps me and the channel. And if you subscribe, I will keep you up to date with future videos. Thank you very much.